Hey friends, welcome back. After a long time, I'm going to change the topic. So that I was posting the chart patterns and price actions earlier. Now I just want to continue my previous series about fundamental analysis. So today, what I'm going to talk about is, see, if you're buying a stock, it might be just 200 rupees or 2000 rupees, but actually you are buying a small piece of a real business. That mindset is very important. So you are actually becoming a partner for a company. And if people running that business are clueless, right, then it's a red flag. If you are giving your money to your relative or something, someone comes to you and says that, Sundar, I'm planning to run a business. Can you invest on that one? And that person doesn't even know about the business or he don't have the experience, right? And if I give the money to that guy, what will happen? I'm just giving a very high level example, but the point here is when you're evaluating a company, before buying a company's share, you have to know about the management of that company, which is very, very, very important. Everybody talks about this management thing, but how do we do that, right? I can do using a screener, I can explore all the income statement, balance sheet, all those things are fine. But how to evaluate the management of the company? That is what we are going to talk about. So let's dive into that. This is Sundar, and you are watching Mindful Finance. So here we are. Don't worry. This is going to. I'm going to explain this in a very, very, very simple way, so that you will not get bored or you will get more interested in learning this kind of a thing. And by the way, if you like this video, give a thumbs up and just leave a thank you note, so that will motivate me to create this kind of a video more. So basically, if you want to understand a business, right, it's not just about what profit they are making, what is their sales, all those things are fine, but how do we check the quality of the management, right? That is very, very, very important, because we sometimes we don't look into that thing and we miss a lot of, or we get into trouble in a lot of time. So before you getting into a business, or if you don't think that you are part of the business, then it's a you don't it doesn't make sense for you to buy that business, right? So unless and until you have complete clarity about the business, who is running the business and how the person behind is running the business, right? If you don't have the clarity about that, it's better avoid that company. You need to have that understanding. If you don't have, please sit back, do a complete research again. If you own some company now using this method, try to go back and analyze your company before buying a product, right? I talk about this thing before I buying any product. I'll not look into a positive of the company. I'll look into all the negative part of the company. When I start to look into the negative part of the company, the one thing is I may not buy that product, or I get more clarity about the negative points. And I know that the negative points might be not much problematic for me, and I go for the positive side of the product, right? But what normally we do is, if I go to buy a product, I'll always look for who is talking good about the product, and I just look into those kind of reviews, and I ignore the negative of the product. When the company is going high with a, I might be feeling more of FOMO to get into that company rather than go back and check what is the problem behind the company. That is the whole thing. So let's get into the thing, how we are going to do that one. That is what this video is about. I'll start with the best example here is Yes Bank case study, where Rana Kapoor owned the complete stake on this one, and he had higher stake, and he had complete control on this bank, and even his entire family was linked to this bank, and he was a big example for wealth destroyer. So once it was he was very, very, very aggressive person in his business, and because of that one, he want to grow very fast. He gave loan to lot of people who are not properly validated their background, and then most of the loans are not repaid. So that was a key problem created, and once the stock price was 400, it fell to 20 rupees and even less. Okay, thousands of retailers lost their investment. So key lesson from Yes Bank is, banking is a profitable sector, right? But that doesn't just means that you can get into that one. You have to understand the people behind that one. Most of the banks will have more independent or professionally run businesses. SEBI or RBI governs those banks, but here there are a couple of banks which are owned by an individual. So example is Yes Bank. So you need to be very careful in acquiring this kind of company. The second one, the good example is Asian Paints. The business might be boring for you. Paint business, it's slow growth, all those things. But it went from making a from if you would have invested 10,000 rupees, now it would be around 15 rupees. Sorry, 15 lakhs. The 10,000 would have become 15 lakhs now. So the way Asian Paints handled was they properly reinvested, properly planned. The management was very good. They handled the innovation area very good, and they made profit for the shareholders. So essential questions you need to ask before investing: are they honest? Whether they are protecting your money or not? Are they capable? Means are they really having a skill set to do that one? Right? Do they care about you? You in the sense shareholders. Are they really care about you? Are they working for the shareholders or not? These are three essential questions you need to ask before you invest in that company. Another example is Kingfisher. Why Kingfisher? Why Kingfisher? The management, Mallya, was a lavish person, right? He faced a downfall because of his stupidness. He got a lot of loan. He transferred his money to different his individual thing. He spent a lot of his money for his personal lavishness, and he took lot of loan, which he cannot even. He knows that he can't pay, but still he went for those loans, and because of that, investors lost lot of money. So Kingfisher is one of the biggest example a management can screw up a good company. The other thing is Reliance. Another one is Anil Ambani's projects. He got a lot of loan. He started an IPO for Reliance Power, and he got lot of loans on this one, and he couldn't able to do what to do next. The problem was all the projects what initiated by Anil Ambani were more infra oriented thing, very capital intensive business. And another thing is whatever the loan he gets to earn profits, to start repaying the loan may take long time. A business will start giving a revenue only after 5 years, 10 years later. So that kind of projects he took, and he took lot of loans, and he couldn't able to pay. But at the end of the day, same like Yes Bank, from 450 it went to 20 rupees, and investors lost lot of money. Even though he came from a very good family, a business family that couldn't save his business, right? So that is another good example you need to understand that. Okay, I'm talking about this thing, but where to check and how to do this one? Nowadays, AI is there. You just search. If you are investing in a company, you just start with, for example, if you want to check a company for, you want to test the company, say the name Zomato. Okay, Google it, or in the chat GPT, you ask, give me all the problems raised by SEBI or any case against Zomato. You search it, you'll just get list of all the problems. That's the starting point for you to research any company before even getting to the annual report or anything, right? You have to watch the news. You have to see the promoters are the ones who knows what is going to happen for the company very early, right? We won't know that. We are retailers. We are outside the company. Only when the incident happen, we will come to know that. But promoters knows that one. So how to do that? It's very tough, right? So that's why we have to keep a tab on the news, what they are doing, what are the activities they are doing, what they are buying, what they are selling. All those things we have to track. So news is the first thing for us. For the biggest example is Kalyan Jewelers. Kalyan Jewelers, they bought Rolls Royce, they bought luxury villas and expensive artworks, corporate jets, right? So people are buying like this. So why they are buying? And they'll buy property in Switzerland or Venice or some other country, saying that it's for a guest house in the name of company. But who is going to enjoy that one? Promoters going to enjoy that one. With our money, they are going to, with our invested money, they are having a lavish life. So that is very important to check. I'm not saying that immediately that don't buy or anything like this. You have to probe, you have to find out problems with their promoters, and then you have to convince. More than convincing, you need to have conviction whether I should invest in this company or not. So that is what I'm saying, that okay, and you have to detailedly investigate this kind of cases. So Kalyan Jewellers is one of the red flag because the promoter is living a lavish life, and yeah, that is the thing. So what these stories teach us now, right? Kalyan, the stock is also is overvalued, and promoters are focusing their self lavish life rather than focusing on the shareholders one. Kingfisher, the similar thing. Promoter had a glamorous life, lavish life, and misuse of loans, and there was a zero accountability from him. So entire Kingfisher airline got collapsed, right? And Anil Ambani's case, he had a very aggressive. He thought like his company will do better, but that over promising is not going to help. In the reality, the poor capital allocation spoiled the entire company. So this is the thing. The market doesn't forgive flashy CEOs with poor delivery. It rewards honest, capable, and consistent leadership. This is the point you have to write in your memory, right? Two yardstick Buffett used for measuring the thing. First thing is business performance. Have they done better than competitors? First thing, very, very, very simple thing. You just check any company with this particular performance points. Have they done better than competitors? So simple example is D-Mart, right? They kept their expenses low. They owned all the stores they bought. Is the whatever the stores they have, right? The real estate, the building, everything is their own. They are not leasing it out, right? It's so in the book they will not mention that I expenses column. They will not find, you will not find leased. Everything is their property, right? So likewise, they are trying to reduce the operational cost so that they give more values to the shareholders, and they are trying to be more competitive with the other retailers, other retail competitors, because the main cost occurs for this retail business is your real estate, the place you want to sell your product. So that is the key thing. And second part is consistent growth. Are they showing a consistent growth year on year? Is there a consistent growth? Example, HDFC Bank. They maintained high asset quality and low NPAs for almost 20 years. That's a very big achievement. Even during slowdowns, they didn't fall. Fall in the sense they didn't find any problem in their bank. Till now, there is no problem with the HDFC Bank. Recently, some news came, but that's not a thing. But almost uh, from 2000, right, they are running the business and they never faced any problem. The next point is capital allocation. So this is the true test you have to do with the any kind of a company. First thing is employee development. Are they retaining their talents? If the company is retaining the talent, are they spending more for innovations? Are they expanding globally? Are their growths are sustainable? So these are the key points you have to think where the management is focusing on. If they don't focus in any of this one, that's a risk in it. Take an example of Infosys under Narayana Murthy and Nandan Nilekani. They invested their money into education thing. They built a complete campus for training people, right? So that is they train and then they onboard the people. So they reinvested their profit. So likewise, how many companies are doing that kind of activity? Check that what they are doing with the profit. Are they reinvesting or what they are doing? So that is very, very important. So how their capital are allocated to these parameters, that you have to check. Another big thing is treatment of shareholders. If I go to Ambani's home or Narayana Murthy, if I go and meet Narayana Murthy and say that I'm shareholder of, I'm holding 100 shares of Infosys, what Narayana Murthy is going to do? I don't know. I never tried that, but I'm just asking. Will security allow me to meet him? Don't know. It's up to. So that is what the thing is. How the promoter is treating the shareholders. Are they treating the shareholders as with complete dignity? Right. That is what important, because every shareholders are invested in paid money to run the business. So how the shareholders are treated? Are there any fair communication happening to the shareholders? There could be AGM, there could be a voting thing happening. Are they really focusing on shareholders' point of view? Independent board oversight. Are they have a proper independent? I'll come to that point in detail. So are they having a proper independent board to run this one? See, this might be looking boring for you, but I'll also show you this thing real time so that you can track. But this is the framework you have to follow. I'm just trying to give you a very simple way to explain. You may ask, okay, how do I find that? That is why I'm giving an example that you have to attend the AGM meeting and see what they are telling you. Are they answering to the shareholders' question? Are they responding properly? Right? Those are very, very important. Are they giving consistently dividend and buybacks are happening? So that also you have to watch. Okay. So they have to give some priority to the shareholders, especially if you see Tata Group like TCS, Titan, Trent are known for their governance and transparency. So if you see an example of using the yardsticks we discussed now, business performance, question you need to ask it as is it outperformed? The good example is D-Mart. Yes. Poor example is future retail. Business performance, again, is there any consistent growth over there? Example HDFC Bank, and the poor is Vodafone Idea. Capital allocation, Infosys, Jet Airways. Jet Airways was the worst example for this is the worst company. Are they transparent? Tata Group is the best example, and Adani is a problem. Okay, the recent ESCC deal has a very, 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 very big problem in that one. I'll explain in coming slides. Are they rewarding the investors? The best one is ITC. The worst one is Paytm. So you can understand by this comparison, right? You can have this checklist and start ticking out your company. Promoter compensation. This is another thing. Okay, the biggest problem is the salary which is paid for the CEOs, the management team. You have to check the salary received by the C-level people and the salary received by the employees. You have to check the median salary and check the CEO's salary. How much difference are there? That is a very, very, very important thing you have to check, because salary of our CEO is, if they are giving more than that, so they need to show some kind of growth in the company. You have to bring that kind of value to the company. One of the example is Paytm CEO, when there was a loss of 1,700 crore, he was getting 4.4 crore as a salary. And Infosys CEO is getting 752 times of the median salary. Just imagine, if median salary is say 1 lakh, he is getting 752 times of that median salary. Similarly, TCS getting 330x of the median salary, and L&T is getting, CEO is getting 533 times of the median salary. So these are the things you need to check for a company. And also here, like a PE ratio, right? You have to check within the company. For example, Infosys and TCS are software technology company. Within that, you need to see how much difference they are having. So 752 means, are they, Infosys doing that kind of growth? Are they showing that kind of growth in their company? TCS is only 330, is a giant company. Okay, compare the growth of TCS versus Infosys. Then you see 330 is almost 2 times, right? Then Infosys has to show twice the growth rate of TCS. Are they showing? You have to check that out. So compensation related checklist now. In an industry context, so Nifty in an average, okay, in Nifty 50, the median pay ratio is approximately 260x. The 50 companies are there, right? If I take an average of that one, 260x is the Nifty 50 median pay with a range of 752, like Infosys, right? So in a normal scenario, 20 to 25x's are considered as a good one, okay? But in India, it's in the range of 200 to 300x. You can compare with that one, okay? So now the key question you need to ask is CEO paying growing faster than profit? Is it reasonable compared to peers? So when this kind of top management side, they're getting more salary, so there will be a disparity between the C-level and the employees. So that will create a noise, right? That means they are not taking care of the employees properly. And it might be a signal of a governance risk. Governance is a very, very important thing. So these are the small red flags in the governance side. So when you're doing management study, or when you checking the governance report, you can check all these kind of points, where this is one of the point for the governance issue. The next one is communication during a crisis. So any problem happens to any company, and how the company reacts to that. That is very, very important. The best thing is immediately the company has to respond if anything happens. So timely response, be transparent, honest. Third one is accept responsibility. No blame or telling something because of that only this happen, all those things. Don't do blaming game. provide action plan. Okay, this problem happened. Now what I need to do? What is my company is going to do? So this is what very very important. And you know the Adani Group's reason or thing, right? When the Hindenburg report came, instead of you check all these points, whether immediately they came to defend or came up with their point of view. Are they transparent? Did they accept responsibility? Did they give a next action plan? Nothing happened. They just defended themselves. I'm not a culprit. I didn't do anything. We didn't do anything. Instead of all this kind of a thing, they just defended. Taking recent example of Tata, Air India crash is a very bad incident happened. It's really it's a bad one. But you should check how Chairman Chidambaram spoke. Chandrasekhar spoke about that part. Right? He accepted the fact. He took the blame. He accepted that one. He was transparent. Okay, something happened. I'm okay to go and check the problem in my flights. And he taken full responsibility of the incident happened. So that is kind of a management you need to have. So that is how you will build a trust with the shareholders. If you are not honest, and he also proposed his next plan, what to do now. I'm okay to do test for all things. Right, all the flights are now undergoing test. Full cooperation is giving. He also had a conversation with the Boeing now. You can see immediately he came down and he accepted this one. All these things are happening. So this is what you need to check. Another thing is Satyam scandal. If you remember 2008, 2009 it happened. When the Ravlinga Raju company was bankrupt, he immediately came forward and accepted that I made this mistake. Whatever the report we submitted, our finance statements are fake. He accepted that, even though before even getting that news, the stock price went down. All the shareholders faced a big issue, big problem out of that one. Another thing, a big example is Uber. Uber's lot of safety scandal, lot of things came up. But instead of responding to taking a responsibility, instead of planning for the next action, they just defended that one. So that is another big problem, right? So as I mentioned, all the scenario you have to take how a company reacted to a crisis or event. Adani, they were defensive, the stock collapsed. Tata, for the crash, they were honest, timely and clear, and made sure for stakeholders nothing would happen. Satyam, accounting fraud, confessed, the trust got recovered, so people held the stock. When the Tech Mahindra acquired, they gained that back. If you have bought Satyam's stock at that point of time, say 20 rupees, 18 rupees or something, right? They got Tech Mahindra share. Now Tech Mahindra share is 1,500 or something, right? So that is the thing. Uber. So there was a cultural safety crisis. They were vague and defensive, and their reputation got damaged. Right? These are the things you have to check in the thing. This is another biggest thing. Okay. This is an interesting topic also, and this can be a complex and tricky thing. You have to focus on this one. Okay. Related party transactions, which is RPT. This is a very hidden risk. To check this one, you have to be very careful in this one. How will you do that? I'll show how do you. Other things are news based. Other things are you need to check the media very carefully. But this is the one you have to track their annual report. Okay, that is where you can check this one. I'll show that one. What does this mean? Related party transaction. For example, I have a company named Sundar & Co. Okay, and my brother is having Brother & Co. Okay, now I might be having a holding of say 50% of that company. And another thing is owned by my sister, which is Sister & Co. There I'm having a 50% of stake. Now, the money which I'm earning from Sundar & Co. Okay, I might be using this for Brother & Co. and Sister & Co. I may get a loan for Brother & Co. and get that money and I invested, I do something for Sundar & Co. or for Sister & Co. So this is called related party transactions. So this kind of thing, there are limitations or there is a very strict conditions which RBI and SEBI has, that how much you can have a transaction or the turnover between the RPTs. So there's a limitation over that one. If it goes beyond that, then you have to consider as a red flag. So you need to be very careful what they are buying, what they are selling. If the transactions are happening through a shell firms, that is need to be very careful. So the main thing you have to check in, go to annual report, check for related party transactions. That is where you will find this one. So these are very hidden details. It might be not obvious, but nowadays ChatGPT is there or Gemini is there. You just upload the annual report and just ask a question that about this particular thing, it will help you out. So you even don't want to go and probe that one. But I'll even the chat GPT sometimes give a wrong answer. So you have to go on multiple times, you have to recheck that one. It may give a very little bit of clue, but it's a manual task, you have to do that. I'll show you how to do that one. Okay. Before that, I'll give an example. The recent one, Gensal problem, right? This is basically happened through related party transaction fraud. How it started, right? It was started with they got a loan for 262. That money got diverted to financing electric vehicles for Blue Smart, right? And they bought some lot of real estates, luxury flats, and because of that, there was a regulatory action happened with the Jaggi brothers, and business collapsed, right? So we need to be very careful what they are buying, what they are selling. That we need to keep a tab on that one. The second one is Adani Energy. If you go and check Adani Energy's transaction details, okay, you'll find lot of issues. Not only Adani Energy, you say Adani Power, all those things, right? You'll find lot of issues. You'll be confused what is happening in that one. If you see the interest paid, they'll say that I paid this much of to a subsidiary. That is again recycling issue within the subsidiaries, and they're saying this much of crore from joint ventures and subsidiaries. Confusion over there. Okay, you'll find a lot of confusion in Adani Energy. I'll show this example. Okay, they might be like legally disclosing all those things, but when you read those one, right, you won't find a transparency in that one. You won't find the reason behind that one. There won't be any relevant document supporting those things. Okay, so that's the whole point of that one. So what you need to have a checklist. So check your annual report, go to related party transactions, and check the firms, check this how much size of transactions are happening, and check that offshore entities whether it's a shell company are involved. So hidden transactions can mask like a loans, inflated cost, or unfair deals. So that can be creating a very disastrous to our investment. I'll just show an example. Okay, so this is the annual report for Adani Energy. Let me zoom this one. Okay, I marked it for your. So this is coming under related party transaction. Moxie Power Generation Limited, a subsidiary of a company with Power Pulse Trading Solution Limited, PTCL. Okay, so this is the inter-party transactions. Here you can see subsidiaries annual standalone turnover. You can say subsidiaries annual standalone turnover of 1,587 crore for the financial year. If you see this one, this is approximately 116.04%. If you say it's 100% is the limitage given to that thing, but they are 116%. So more than subscribed or specified limit. If I go and check any relevant document for this one, they're saying is not applicable. Okay, the statement that the valuation or other external report, if any, relied upon by the listed entity in relation to the proposed transaction will be made available through registered email address of the stakeholders or the shareholders. They're saying this will be sent to the shareholders, but they're saying there is no supporting document that's not applicable. So this is one of the example. Okay, there are a lot of example. I'll show another one. Very important thing which you need to see. So that is how you can check the other party transactions and related party transaction, and you can find out the problem behind that one. So likewise, if I probe, there are multiple issues you will find out. Similarly, you can go and check the Gensal's issues, right? That one, you can check Paytm, you can check Adani's, not Adani, sorry, Reliance Power. You can also check for, so all those companies have this kind of issues. Vedantu, that is the worst thing you can see. It's a mess in their statement. Yeah, so the next one is about vision and future plans. So what to check? A company direction, are they having a proper direction? Are they having a proper logical diversification? So all those things you have to check, which is like we can read in the annual report about they would be calling out. And this is very interesting stuff, okay? And when you read the annual report, I like this part because it gives an idea about what they are planning next. If you go to pharma sector like Dr. Reddy's, Natco Pharma, they'll talk about what the research they are doing. What is the next target about? What is the segment, where they are researching, what kind of medicine they are researching, right? And similarly, Natco Pharma, which general medicine they are targeting, right? So they talk about their growth, and TCS, they'll talk about the AI part, where they are focusing, how to grow, how to really bring value from the AI, right? So this kind of things they will talk. So that part you have to be very interesting, that you have to check. If you go and check the Asian Paint, they'll have clear vision about what they want to do, what are the different types of paint they are trying to do, that home decor section, how they are focusing, what are the innovation they are focusing, so those kind of things you will check in Asian Paint. Similarly, as I mentioned, for TCS, if you go and check, they'll talk about AI automations, the cloud, everything is going to be cloud, right? All those things they'll cover. And the next one is very, very important one, board of director analysis. Why board of directors analysis is important is this will give you an idea about the promoter's power in that company. If there is more promoter power, that means it's a risky one. Why I'm saying risky is they will be like controlling everything, like Yes Bank, like Adani. They have more holding in that company. So whatever decision they are making, they will go with that one. They will not listen to others. So independent directors are important roles they play in this one. So overall, you need to have more independent directors so that they will guide you and they will be supporting the decision maker rather than independently making a decision. So independent directors versus the direct board members has to be balanced, or you need to have more independent directors, right? So you need to check. If you check the TCS, I'll just show the TCS one. So if you see TCS governance, sorry, it's here. If you see, so this is non-independent director, these are independent non-executive directors, right? And non-independent executive, and these are independent. If you see the average board independence, independent is 62.5, non-independent is 37.5, right? So that means non-independent is very less, so independence is more. So this is how a board independence has to be there, right? There should be more independent. So the leadership will be balanced. Otherwise, a person having more control will be taking over it. If I see an example of Adani, if you see this is Adani, okay, Adani has a lot of stakes, okay, and ATGL, this is for Adani energy thing, okay. SEC, he might be having almost a 50% stake there, but if you see direct stake, it's only might be 6%, but Ambuja Cement is having 50%, right? So it will be very complicated to find out their holdings. So end of the day, what you will find is everything they will be holding it. They will be having control on that one. So likewise, you won't have the independent directors are taking a decision. So that is where the Adani's issues are. So as I mentioned earlier also, Yes Bank has a promoter issue. Tata Communication, if you take an example, okay, if you see this is the chairperson, independent directors having a high independence level. So if you see almost 57% in Tata Communication is independent, right? So that is how your governance system has to be. So normally your board of directors has to be greater than 50% has to be experienced in independent directors. Okay, that is very important. If anything is contradictory to this one, you need to find out as a red flag. And the next one is important one is a promoter shareholding pattern. If I go and see any of the company's shareholding pattern, if you see Zomato, okay, Zomato, there is no promoter holding at all. Everything is in the public. If you see Dipinder Goyal is public, okay, Dipinder Goyal is a public, so he is not as a promoter now. Okay, all are now independent directors controlled by them. If I go for say Adani, let's say Adani Power promoters, if you see 74.9% of the promoters having, right? In that Gautam Sandila Adani, see 38.86%. And the shareholder pattern is consistent. It is increasing. So one side it is positive that the promoters are buying their own shares. Another problem is more promoter holding will create more demand. The price of the stock may go high because the floating might be very less. Right? This is also overly held by this one person. So the float is very less. So it is rising the price without even a real demand. Okay, but if I go to Zomato, FIIs has reduced. If you see, FIIs are reduced and DAs are increasing the position. Okay, and public also increasing, right? Decreased recently. Okay, so that means even like with Dipinder Goyal has sold his own stake, right? So this kind of thing you have to check how their shareholder patterns are increasing. If anybody is selling, see if the worth is 10,000 crore, and if they sell the stakes of 1 crore or 2 crore, then that's okay, not a big deal. But if they sell 100 crores, 10 percentage of their holdings, right? That is where you have to check. That is the red alert. So hope you got this idea. Now the point here is this analyzing the management is kind of a tricky thing. That is what everybody is talking about, but it's not. It is if you are tracking properly about the news media and try to understand this check. What are the checklist I have given, right? We follow that checklist. Take your company and use a checklist and mark that parameters and find out what are the red flags you have. Very simple. You try and post in my comment. That would be what I'll be super excited. I'll feel very proud of you guys if you do that one. Let's see in the next video. Before that, I again recommend or I request, if you like this video, give us just a thumbs up or a simple thanks note so that it will motivate me to make this kind of a video. Thank you.